Alright, for this video I want to go over a sample PA-40, which is a Pennsylvania income tax return for an individual. So this scenario here, we've got Adam, taxpayer, who's going to be a full year resident of Pennsylvania. He lives there, he works there, so he's filing his PA-40 for the 2022 year. Now, in addition to this, we also have Adam's 1040, which we'll go through briefly. Because it's important to know what's on the federal return in order to make any kind of adjustments that might be required at the state level. And that's what we'll see in this example. And then I have one slide here covering some background information on the fact pattern, and then some Pennsylvania tax notes that address some of these state to federal differences that we see. It's not an all-inclusive example. There's certainly a lot of different adjustments that have to be made depending on your circumstances. But what we have here in this example is some of the common ones. So for our fact pattern here, we've got Adam, taxpayer. He's a single filing taxpayer, and he's a full-time resident of Harrisburg. He's a consultant and earns a salary of $87,000 per year. His W-2 is going to show wages in box 1 of $84,000, and Adam made a $3,000 pre-tax 401k contribution to that employer-sponsored retirement plan. Now keep those numbers in mind because this is one of those state to federal tax differences. PA treats these pre-tax contributions a little differently than for federal tax purposes. Now for investment income, Adam's got a bank account here, paid some interest of $100, brokerage account, received some dividend income of $250, and then he's got some short-term capital losses and long-term capital gains. Now also in his investment portfolio, he's got some Florida municipal bond holdings, which paid him interest income of $47, and he has some U.S. Treasury interest income of $75. Now for health insurance here, he's covered by a plan at work, and it's a high deductible health insurance plan. And so he decided to open an HSA, a health savings account, and contribute $1,000 to that account. Adam rents an apartment and has no itemized deductions, so he's going to be claiming the standard. Now, as far as Pennsylvania return goes, we're going to do the PA-40. This is going to include Schedules A and B and D, and then also Schedule O, which is where you report any kind of Section 529 plan contributions and other deductions such as contributions to HSAs or MSAs. Now, Pennsylvania does not allow a tax deduction for contributions to retirement plans. So this 401k retirement plan, we're going to get a deduction for that at the federal level, but you don't get to deduct that for state purposes. So we're going to see an adjustment there. Now, Pennsylvania does follow the federal treatment for HSA contributions, so there's no differences there. Some states don't follow the HSA contributions that the federal does, so Pennsylvania does agree with it there. Now, municipal bond interest. So, muni interest is exempt from federal income taxes, right? But it could be taxable in your state of residence, and so Pennsylvania won't tax municipal interest issued by Pennsylvania, the state or city or local governments, but if you have municipal bond interest from outside of the state of Pennsylvania, that will be taxed. Okay, so that's another adjustment we'll see. Now, as far as tax rates, capital gains and qualified dividends, it's all just taxed as ordinary. There is no favorable tax treatment for capital gains, and that is different for federal tax purposes, right? We get reduced tax rates for qualified dividends or long-term capital gains at the federal level, but at the state level here, all of it is just treated as basically one category. All right, so let's have a look at the federal return, and then we'll go through the Pennsylvania filing. So this is Adam's federal Form 1040. I want to point out a couple things here because we're going to see the differences on the PA return. So line 1, ordinary income from wages, right? So this is box 1, W-2 wages, $84,000. But remember, his gross was $87,000, but he's getting that $3,000 deduction for the pre-tax 401k contributions. For PA purposes, we'll see something different, right? Because you're not allowed a deduction there. Taxable interest income. So if we have a look at Schedule B, we can see the bank savings account interest, the treasury bond interest, and then the $250 in dividend income. But notice for federal tax purposes, we are not including the tax-exempt municipal interest, right? That's tax-exempt municipal bond interest of 47, reported in 2A. So the state muni interest isn't taxable at the federal level, all right? Then we've got the net amount of capital losses. And then line 10, adjustments to income, we have a deduction for that HSA contribution. So we've reported it on the 8889. He's got his HSA contribution reported on line 2, so he gets a $1,000 deduction there. And then that is reported up on Schedule 1. So in Schedule 1, Part 2, we've got the health savings account deduction of $1,000. All right, so that's his federal profile, very quickly summarized. So now, if we look at the Pennsylvania 40, what are the differences here? So line 1 is his gross compensation, so $87,000 in gross wages, right? Again, the difference is for federal purposes, you report 84 because you are allowed that deduction for the 401k contributions. Not the same treatment for Pennsylvania purposes. So $87,000 in gross wages, and then lines 2 and 3 where we find our interest and dividend income. If we have a look at Pennsylvania Schedule A for the interest, we can see here interest income reported on the federal return, right? So it's $175. The tax-exempt interest income included in line 2A. That's the municipal bond interest from Florida, so we're adding that back. So we've got total interest before making any adjustments of $222. So now these are where the state adjustments come into play. The interest income from obligations of the U.S. government, right? That's the U.S. Treasury interest. That is a subtraction because Pennsylvania cannot tax that. So we are subtracting the $75, which is subject to federal income taxes, but not subject to Pennsylvania state taxes. So now we've knocked it down to $147 in net taxes, in net interest income. This is the amount that's subject to tax at the Pennsylvania level. So this is the bank account interest of $100 plus the $47 of Florida municipal bond interest. And so that amount flows up to line 2, right? So we've got our line 2 amount there for $147. Now, the Schedule B in this case isn't necessarily required because we don't have any adjustments, but we can see here we've completed it nevertheless. So we've got dividend income from line 3B, $250. We don't have any state federal adjustments. Right, a common one is exempt interest dividend income, right? So if you have exempt interest dividends that otherwise would or would not be subject to Pennsylvania taxes, you might have some adjustments there, but we don't have any unique adjustments related to our dividend income. So we just report the $250 as is. Line 5, we've completed our Pennsylvania Schedule D. Skip down to that one. So we've completed our PA Schedule D to report the sale of stock, the net amount of capital losses. So that's reported up on page 1 as well. And so now we have our total PA taxable income before any other deductions of $87,397. Now the $1,000 other deduction, that is reported on Schedule O. So if we jump to PA Schedule O here, we've got a couple of sections. So Section 1 and 2 are related to these 529 savings account programs. We didn't have any contributions or distributions from those, so nothing to report there. But we do have to complete Section 3 for our HSA contribution. So line 6, the HSA contribution allowed for federal purposes, we were allowed $1,000. So we total up all the amounts available. The total income reported, so that's pulling from PA-40 line 9. and then we are allowed to deduct the lesser of the two. So there is an income limitation imposed on these HSA deductions, but in this case, our taxpayer here, Adam, has more than enough income to be able to deduct this. So he does get a full $1,000 deduction for his HSA contribution. So we've got the 87 minus 1,000. We're down to adjusted PA taxable income of 86,397. And so the PA tax liability, pretty straightforward, right? It's line 11 times 3.07%. Because again, remember, there's no distinction between different types of character of income, really. All of it is just included as one and subject to this flat rate. Now, the PA income taxes withheld. So on his W-2, he did see that he has Pennsylvania source wages and Pennsylvania income taxes withheld by the employer. So he's reporting the $3,000 of Pennsylvania taxes withheld that's on his W-2, so he gets credit for that. So the net amount that was over withheld was $348. That's his tax refund. So $348 is the amount of refund that Adam will get back from the state of Pennsylvania. And then his federal return is certainly filed separately with the IRS, and then he either owes or gets money back there, depending on the withholdings as well. So in this case, pretty straightforward Pennsylvania return, right? Adam doesn't have any kind of credits or other types of adjustments that would be made. He just has those unique items related to the 401k contributions, the HSAs, and then the tax-exempt municipal interest. So that covers it for this tutorial. I hope that was helpful. If you have any questions, leave a comment below, and I look forward to seeing you again on the next video. Thank you.